okay, this here is a balloon. So in 1971, Nixon took the dollar off the gold standard. So what did that mean? That meant the U.S. government, the U.S. Treasury, could now print money. So the U.S. Treasury would sell a bond to the Fed. Over here would be the Bank of England, Bank of Japan, ECB, and all this. So in 71, it was the U.S., not anybody else, basically screwed the world economy. So rather than fix the economy, they just did this. So things were fine. They fixed the economy. You know, inflation went through the roof. There's a dollar sign on it. And like this.
They're pumping money into the system.
So 87, there was, you know, the real estate, everything's getting expensive. Inflation's going crazy in the 80s.
Right.
87 crash, big crash. Did anything happen? No, nothing happened. They just. So 87, it went like this. And then there was the LTCM plus the Southeast Asian crash, the rupiah crash and all this.
Yeah, in the end of the 90s.
So what did Greenspan do? It was the Greenspan put, right? He says, oh, don't worry. We'll give the banks all the money they want so you won't crash. So the banks and Treasury and the central bank, the Fed and Bank of England, they're like keeping this thing out. So everything's inflated now.
They're pushing money into the system to prop it up every time.
Fake money.
Fake money.
This is fake money
Right.
going in. So then in 2000, the dot-com crash hits. It goes. So Greenspan kind of panics and he says, oh my God, we better keep this thing going because that was a pretty big pop, you know?
Yeah, I was there.
So 2008, that's when everybody was into derivatives and, you know, pumping this baby up. And it did nearly come down. We had some Lehman came down and Bear Stearns was wiped out. And it was like this. So what did Bernanke and those guys do? More. So after 2008, they just kept pumping it. And it's getting worse. So now we have the stock market, this one area of the economy, all-time highs, floating on fake money. Real estate, I mean, I don't know how people can afford to live. You know, in New York, I was looking at a condo for $55 million. You know, real estate in Silicon Valley, you can't afford to live there. And then all these companies started borrowing money, so the economy's good, and you know, unemployment's low and all this. They say there's no inflation, but have you seen the price of food, real estate, and student loans and medical? It's a bubble, you know? So now what's going to happen is the baby boomers, my generation, are going to start to retire. There's no money there. Social Security is broke, pensions are broke, the students are broke. You know, they're screwing everybody with debt. So let me ask you a question. This is
making me nervous.
I know. This is called, not economics, this is called bubblenomics. But they'll never teach you this in school.
And why do they keep printing money? Because they want to save something.
Because it's an addiction. You know, this is like heroin. The moment you take that one hit, they say, okay, I'll quit next week. And the economy gets worse, so they go, Trump gave us a tax cut in America. This thing gets bigger and bigger and bigger. So what happened in 2008, they stopped it by printing money. So they call it the Great Recession. But they didn't really fix anything.
Right.
You know, derivatives went from 700 trillion to 1.2 trillion today. Twice as much. And that is net. You know, doesn't tell the whole story. So when the recession hit, the PhD standard came in. That was Bernanke, you know, and then Yellen. The PhD said, they have PhDs. Well, it's no different than long-term capital, LTCM. They had Nobel Prize winners, people like my poor dad, academics, you know. So anyway, this is what's going on in the world economy today. So the baby boomers are going to retire now. Student loans are bust. So do you have to be an economist to say what's going to happen? Because we're fighting a 12-year war now. Entitlements are going through the roof. National debt to GDP is 109 in America, 109%. 90% is too late. We have to keep printing now. So this is called bubblenomics, and this is what's going to happen. Got it?
I got it.
Is that economics 101?
Scary stuff.
It's happened throughout history.